The calculation process for earnings per share involves several key steps. First, one takes the net income, which is the total profit of the company after all expenses have been deducted during a particular period. This net income represents the profit available to shareholders. Next, if there are any dividends that must be paid to holders of preferred stock, that amount is subtracted from the net income because preferred shareholders have a higher claim on earnings. What remains is the profit available solely to the common shareholders. Finally, this remaining profit is divided by the weighted average number of common shares outstanding during the period. The reason for using the weighted average instead of the ending number of shares is to account for any changes during the period, such as new shares being issued or old ones being bought back. When all of these factors come together, the result is a simple yet powerful number that tells investors how much profit each share earned. Understanding earnings per share is important for several reasons. One major reason is that it provides a direct insight into the profitability on a per-share basis. Investors often use this metric to determine how much money a company is making relative to the number of shares they hold. For instance, if the earnings per share are rising over time, it generally signals that the company is becoming more profitable, thus offering a compelling reason for existing shareholders to be optimistic and potential investors to take a closer look. Investors and analysts also use earnings per share as a building block for calculating other valuation metrics, such as the price-to-earnings ratio, where the share price is divided by the earnings per share. When earnings per share is high relative to the share price, it might indicate that the company is undervalued, whereas a very low ratio can suggest that the stock is expensive. This use of earnings per share makes it a cornerstone of many investment decisions. Watch out other videos for more information on how to use earnings per share when investing.